Well, Wall Street analysts are split on the forecast for the S&P 500 this year. While Fundstrat has one of the most bullish forecasts for the index with a year-end target of 4,825, Piper Sandler sees the S&P falling way out of bull market status to 3,225 by the end of the year. Now, Barclays just raised its target today to 4150, which, while higher than before, still indicates downside risk for the S&P. Joining us now to break all of this down is Yahoo Finance reporter Jared Blikre. So, Jared, break this down for us, this general outlook for the markets, and how will tomorrow's inflation data also play into this?
That's a big one. And when we think about analysts in the S&P 500, this is a tough year for forecasts. And as you can see, they're all over the place. You were just talking about 4150, and I'll get to that in a second. That is materially lower than the current price of 4422. So let's check out what's happening. Barclays has actually raised their price target in the S&P 500. That's that 4150 number from 3725. So playing a game of catch up like a lot of analysts are. That's one camp. Others are just saying, no, the bottom's going to fall out and we're going to try and catch that downside, but we're expecting that downside to be big. Now, back to Barclays. We think equities would remain range-bound through year-end and do not see the tech-centric rally broadening to the rest of the S&P. We would tactically add to secular growth exposure. We know that most of the gains this year, if you look at a year-to-date chart or the S&P 500 sectors, you're going to see those in the mega-cap sectors. And I'm going to show you that right now. Here's the sectors in the S&P 500 today. Here they are year-to-date. Tech, communication services with Meta, Alphabet, etc., and consumer discretionary, which houses Amazon as well as a lot of other retail names. But the argument kind of falls apart a little bit once you start drilling down to a smaller time scale. And here we have industrials, we have materials. Those have been joining the party. And I've been talking about, this is over the last month. Take a look at some of my leaders here. Even meme stocks have been attracting money over the last month. ARK as well. Crypto, IPOs. So there's a whole new kind of risk regime just dipping its toes in the market. Could it reverse? Possibly, but that's what Wall Street is trying to figure out here. And the opinions are varying. I was also listening to an HSBC interview with their CIO. He thinks it's going to be a choppy year and that recession risks have not been factored into the market properly. What are those recession risks? Well, we've been talking about it till we're blue in the face, and it is not here. Looks like it's not imminent. However, the potential remains for that, and a lot of analysts are holding on to that call. So here's the S&P 500. Here are the recent highs going back to the middle of last June, had that mild retracement, but really just consolidating in a very narrow band in the upper end of its range. That's really bullish until reality tells us something different. I would wait till maybe the neckline is breached here. We have a potential top in play, but that has not happened for sure. So until then, the price remains the bulls to disprove.
Indeed, it's a lot of uncertainty to play out there. Thank you for that update. Our very own Jared Blikre there for us.